All right, Ripple XRP holders. So it is happening right now. The Fed is giving their FOMC open market committee meeting speech with Jerome Powell, holding the press conference, talking about interest rates, talking about what's happening right now in this July meeting. And so we're going to be coming back at the end of this, and we're going to be sharing with you what Jerome Powell has to say. And I'm going to be making another video as well too today, so you guys can see what's going on. And then we're talking about the Dow Jones Industrial Average on the chart, comparing it back to what happened from 1966 all the way to 1973 and the volatility that was taking place in the Dow at that time, and also looking at the effective federal funds rate chart on where interest rates were at that time, how they were adjusting them, the correlation between the Dow, the stock market, and Bitcoin as well too, on the past, comparing Bitcoin to the bull run from 2015 to 2017, on how many days it took to break out, some similarities we see in the chart pattern, the ETF narrative on how that could be a massive wild card that could decouple crypto even more from the stock market, with BlackRock, Fidelity, and the spot Bitcoin ETFs, and then the SEC appeal on Ripple, how that's going to affect the rest of the industry, what Stuart Alroy has to say in this recent podcast, and then Democrats splitting on a crypto bill and different crypto bills that are being proposed right now, 4 bills that could drastically change the shape of the crypto landscape over the next few years. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by smashing that subscribe button. Bull runners, welcome back to the channel. So with XRP sitting at 71 cents, up 2% on the day, Bitcoin consolidating sideways, nothing too crazy. We're not seeing a drastic green day. Some of these are down a little bit, 1 to 2%, or up 1 to 2%. So we're consolidating sideways right now at a $1.18 trillion market cap as we wait to see what the Fed is about to do next. And so with XRP's price chart right here, XRP bounced off of this support zone, all the way down to 67 cents. And we need to see XRP hold this resistance as support at 0.716. And so this horizontal red line that you guys can see right here is currently trading above it on the hourly candles right now. We need to see XRP hold this to see momentum shift to the upside to retest this downward trending resistance from the high of the 13th of July, and then also the 20th of July right here. So if it were to retest this, I could see XRP pushing upwards of 70 on the RSI over the next few days if we see some bullish momentum happen for Bitcoin and the Dow. And that's what we're going to get into in this video. But XRP right now is sitting at 60 on the RSI. So, in the middle of the range, give or take. And so if we see XRP, trade to the downside and stay within this zone right here, closer to the support, then what will happen next will be based on this interest rate hike, if the Dow pushes up higher, if Bitcoin pushes up higher or not, because the liquidity in these markets, it looks very interesting right here with the RSI on the Dow sitting at 76 on the daily candles right here. Now, comparing back to the past, one thing that's very interesting here is if we go all the way back to 1966, when the Dow formed a high of roughly, it was about 997. Right now, the Dow's at 35,605, and I'll bring up the Dow to gold ratio as well too and explain why I'm not getting into the stock market right now. But when we were about 570 days from the high to where we are today, well, in the past, when we were about, give or take a few days, 570, 574 days, we were roughly right about here in this range that you guys can see on the right-hand side of the screen. So we were roughly right about here as the Dow was retracing back up to 786 on the Fibonacci retracement. Now, on the left-hand side of the screen, we're a little bit above 786. And so in this day and age, where we are in terms of the effective federal funds rate, well, let's look at this back from what happened from 1966 to 1968. So for 2 years, from 1966 right here, you guys can see the effective federal funds rate was about 4.6, 4.7, kind of bobbled around for a little bit. They raised it up to 5.256, and then they just kept keeping it at about 5 to 6. And then to 1968, they lowered it back down to 4. And so for that 2-year period, we went from roughly 4, 5, or 6 on the interest rate down to 3 and 4 to 1968. And so when we lowered it from there, Well, what happened from 1966 to 1968? Well, the stock market saw a crash when they were lowering it. And so we're at a different time period because the Fed is raising it up. And so based on lowering it, we actually saw a crash and a correction take place in the market. But shortly after, roughly 570 days, even though we saw a correction happen for the Dow, we saw the Dow go all the way up to retest the all-time high before completely getting obliterated and crashing even more. Now, the interesting part about this, if we look at the percentage of correction, is about 26% correction in the short term. It took about 280 days right there. Now, if we were to look on the left-hand side of the screen in terms of the correction, well, it took about 280 days as well, too, and it was a 22% correction. So some similarities there. And if we were to look on the macro scale, and if I were to do an ABC correction right here, so we see the A wave right here, the B wave coming all the way back up to the high, and then the C wave forming a new low for the Dow. And if I were to measure what that was from the previous high right here, we could see that that was a 37% correction. So a lot of people are arguing, saying that a massive, even bigger correction is coming for the Dow of like a 30 or 40% correction to come all the way back down to these levels that we saw pre-COVID and pre-pandemic happen right there if the Dow were to get rejected from either where it is right now or from the all-time high. So in the short term, for the rest of this year, while the Fed raises the effective federal funds rate, anywhere from 25 to 75 basis points the next few meetings towards the end of this year, I could see the Dow having some volatility, maybe pushing a little bit higher. And then if we see something like this take place, where then we see a drastic crash in the Dow compared to what happened to 1970, then we could see something like this over the next few years and the next few decades, where how many years did it take before the Dow even passed the high decisively and went on a bull run? Until 1982. So from 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82. For 16 years, we saw this consolidation period sideways, followed just by massive volatility for the Dow. So could we see something like that? Well, if this were to take place, hypothetically speaking, what would happen to the entire crypto market? What would happen with Bitcoin? Because Bitcoin XRP has historically been correlated to the stock market. So I hope that nothing like this happens, right? I hope that we don't see anything like this take place where the Dow forms a new low, because if the Dow breaks the all-time high, well, that's good news. But we saw the Dow break the all-time high back in the 70s right here. We saw it break the high, and then it followed by another correction period, another crash that took place, retracement, another crash, retracement, crash. So this period of volatility took so many years before anything serious really happened. The Dow didn't make any gains until after that period. So what happened in 1982? Okay, what happened in 1982 that caused the Dow to do this? What happened here? And what caused all of this chaos? This is what we really need to look at. What caused this chaos? Because to predict what could happen, in the stock market or the crypto market over the next few years, imagine being at this stage right here in the Dow, and you're like, back in the 60s or 70s, you're like, yeah, hey, this correction, we're done, we're going back up. And then all of a sudden you come back up, you pass the all-time high, and then all of a sudden you're investing in the Dow at this point because you just broke the all-time high, thinking that it's going to do something like this and it's just going to keep going up, right? If you thought this was going to happen, you were in for a world of hurt, because if you put your portfolio into the Dow right here, you would have dropped another 47% right there. And so would we see something like this over the next decade, 10 to 20 years, especially with the volatility overseas, with the trade war with China, with the BRICS nations rising up, and then the stock market historically, just being overvalued in terms of liquidity and massive monetary print orders and all of that, and this house of cards, waiting to crumble down that people have been calling for. Lots of billionaires have been saying a bigger crash is on the horizon. So could the bigger crash that's on the horizon be a macro ABC corrective wave? So for example, this is the A wave. Are we seeing the B wave right now? Is that what we're seeing on a macro scale? And this B wave could push to the all-time high, could push a little bit higher, and then come all the way back down to, what the levels were around COVID or pre-COVID, all the way back down to 26,000 or even lower than that. Could that happen? Could we see something like this take place? It's anyone's guess here, but what took place during that, 16-year period, 1966 to 1982? Well, if I were to zoom out on the macro, on the FOMC right here from 1966 right here, well, the Fed effective federal funds rate was about 4.5 to 1982, they were raising it up. So the federal funds rate was very volatile. They would raise it up 1969 and then drop it down by 1971 to 3. So it was upwards of 9%. Then they dropped it down to 3% by 1971. Well, what happened from 1969 to 1971? 1969 was the B corrective wave on the Dow to 1971 is when it dropped this massive C corrective wave, and it dropped about 40% right there. So when the Fed raises the rates is not the issue. It's when they pivot and when they drop the rate drastically. So right now, while the Fed is raising the effective federal funds rate, and we're going to come back on and share with you what Jerome Powell has to say about their plans. And if we show you what happened in the previous video, if you guys watched that I made on the channel, talking about how they plan on raising it the rest of this year, what I'm expecting to happen for the Dow is for the Dow to go higher. I expect the Dow to go higher. I expect that to bring liquidity in the crypto market as well too. And I expect, maybe for it to retest the all-time high, maybe to push beyond it. Ultimately playing within this range right here is what I think is going to happen for 2023. And then once we get up within this range, depending if the Fed is going to continue to raise the effective federal funds rate or if they're going to announce a pivot in 2024 is when we could see a correction coming for the stock market and a absolute disgusting crash happen. Now, the reason to support my crash hypothesis here, now I hope this doesn't happen, okay? Now, a lot of people are saying, I thought we were going into the biggest bull run. The wild card is the ETF. The money and the liquidity shifting from the stock market into Bitcoin into the crypto market is what could create the biggest landscape shift in investing history into blockchain technology companies, into cryptocurrency companies from the stock market. And we could see a decoupling completely from crypto and the stock market. Now, that's going to be a lot tougher to confirm that than a lot of people believe because, historically, when we look at Bitcoin to the Dow, Bitcoin has been correlated, but there has been some decorrelation periods as well too. As you guys can see right here, when Bitcoin fell from $21,000 all the way down to $15,000 for the low, well, the Dow was rallying. So we saw this massive rally in the Dow. So it was completely inversely correlated right there. So could we see something like that where even if the Dow pushes higher and then we see a crash happen for the Dow, could we see Bitcoin go on a massive bull run and be inversely correlated for that? I could see something potentially happen like that with BlackRock and what I'm going to share with you guys. Now, one thing that's interesting to look at on the right-hand side of the screen that you see right here in the micro in terms of this ABC corrective wave and then this bounce, close to the 200 moving average, we saw something similar take place all the way back from 2015 to 2016. And I see some similarities on the chart right there where we see this support for Bitcoin all the way back from 2013 that it struggled to break out from. And it acted as resistance, all the way back in November of 2015 from this range. We see something very similar happening with Bitcoin on the price chart where it's just struggling to break this $30,000 price zone. You see where it wicked at back in July of 2021. If I were to draw this for you guys right here, very similar to what we're looking at on the right-hand side of the screen, we saw happen on the left-hand side of the screen back from the bear market leading into the bull market rally. So we kind of bobbled around this range right here of resistance above it and below it for 205 days. So how long have we been bobbling around here on the right-hand side of the screen? Well, if I were to measure from the high of April of 2023, about 103 days. So between 100 and 200 days right here, could we see something like this take place if I were to trace the chart up to the right, this ABC corrective wave, where after the C corrective wave was in, we're seeing this bounce take place above this resistance, where we see the bounce take place above this resistance, coming back down within it. Could we see it go lower, below it, down to the 200 moving average? This is what I feel could happen for Bitcoin. Down to the 200 moving average, we see a bounce off of the 200 moving average, followed by consolidation within this range over the next few months towards this year. And then the wild card that takes place is BlackRock's ETF gets approved by the SEC. Now, massive amounts of liquidity from the stock market flows into crypto, and we see Bitcoin break out, and we see the biggest rally for Bitcoin that we've seen in a long time. Could that happen? Similar to what happened right here during this phase, where we see Bitcoin break out, followed by this massive back test, right? Bitcoin breaks out, massive back test, and then we continue the bull market rally leading to the top of 2025. Could something like that happen? Well, it's anyone's guess right there. And ultimately, what's going to happen with the Fed, what's going to happen with Jerome Powell, what's going to happen with the economy as they try and prepare for a soft landing, it's going to be very difficult, because why did they need to keep rates so low from 2009? What happened here? Well, from 2007 to 2009, they dropped the rates from 5 to virtually nothing, right? 0.1%. They didn't need to keep it at 0.1% to 0.1% to 2015. So for 7 years, they kept the rate at virtually nothing while they were printing more money than ever before, so they could make the elites richer, and pump the stock market and pump these markets, and the real estate market went absolutely crazy after that to stimulate the economy. And so that's when stimulus really started to go into place. And I don't know which president, was it George Bush? It was one of the presidents that really started pushing this out there and pushing more stimulus and monetary print orders, and things went crazy during this period. So it just destroyed America. So America was destroyed in 2008, right? A lot of people think that the economy was destroyed when COVID happened. No, it was destroyed during the 2009 market crash right here, because there was no reason for this, to keep rates this low while printing massive amounts of money. There's no reason for that. They rose it up to 2019. And as you guys saw, what happened here? Well, February to March of 2020, the rate went from 1.58 and it dropped down to 0.15. So COVID had to do with this as well too, right? The economy closing down, and all of a sudden that coupled on top of it, right? That's like stacking a brick on top of another brick right there. Well, dropping the rates from 1.5 down to 0.05, that right there is what caused a crash in the markets with the rates. And so with the Fed raising the rates really, really fast right now, this is not a good sign, guys, right? While they're raising the rates, we're seeing the markets rally. We're seeing the Dow go from a low right here of 28,000. And so the Dow is up about 23%. So this could be the biggest bear market rally of all time that we're seeing in the Dow. Now, I hope that this would decouple from the crypto market. But looking at the RSI right here is 73. This is not a good sign for the Dow. This is not good at all, right? Because the last time that we were pushing upwards of 70, that was that B corrective wave on the macro scale. And then how long did it take before the C wave was in from the previous all-time high for the Dow? Well, it took about 1,617 days. And so what would that push us to for 1,000 plus days? I mean, for 1,000 plus days, that would push us to 2025, right? 2025. And so will we see crypto rally to the top of 2025 while money comes out of the stock market, right? If money's coming out of the stock market, where would that money be flowing? Would that be flowing into bonds? Let me know your guys' thoughts. Would that be flowing into the crypto market? Is it possible for crypto to go on a bull market rally like 2016? Or could crypto be stopped short, similar to what happened to 2019, and we see something like this take place alongside the Dow, right? The Dow pushes up higher, Bitcoin pushes up higher, everyone gets faked out, maybe thinking that something like this is going to take place, when in reality it gets topped out like 2019 and comes down. And then we see, a super cycle where it takes longer for Bitcoin to reach a high, and it doesn't reach the high by 2025. It reaches the new high by like 2027, 28, 29, 30 as we go through this, 5, 10, 15, 20 year period of the Fed pausing, lowering rates, raising them back up, pausing, lowering rates, raising them back up, similar to what happened during this time period right here, right? Where they would raise them up, pause them, lower them, raise them up, pause them, lower them, raise them up, pause them, lower them. Could we see something like this take place? Because it's very, very questionable. Anyone trying to guess on what's going to happen moving forward, right, with 100% accuracy, it's going to be very tough. And I'm going to share with you my plan, so regardless of whatever happens, I'm prepared. Regardless of whether the market goes on a massive bull run or we see the biggest crash of all time, the opportunity that's going to arise from both scenarios, I'm going to show you how to position yourself. Now, again, this is not financial advice. Don't buy, don't sell anything, but I want to share the narrative here, and I want to share with you what to do to prepare. Because since BlackRock's filing on June 15th, Bitcoin has produced a return of 25%, ignoring the range-bound activity in the US stock indices. And with the SEC's appeal, it could amplify Ripple's win. And XRP is virtually the only cryptocurrency that has clarity alongside Bitcoin here. So if we're going to see a massive rally in the crypto market, and if you have any hope for crypto whatsoever, if the stock market continues to trend higher, even if it decouples and the stock market goes down, and you have hope that money's going to flow into the crypto market, well, XRP and Bitcoin would be those projects to hold. Not financial advice, but because Bitcoin is a commodity registered by the CFTC, XRP is not a security, so the SEC has no say over XRP unless they appeal, and that appeal would take multiple years, and it's just going to take forever and most likely get thrown out by the Supreme Court. But Stuart Adelroy believes that if the SEC takes the case to an appeal, the court can move to consolidate Ripple Labs' partial victory over the financial regulator even further. And he says that we think the judge got that right, and we think that was a faithful application to law. I think a court of appeals will not only affirm that, but maybe even amplify that to a greater extent. And here's one of the biggest points that he had to make about XRP. For those of you that don't know, that XRP wasn't created by Ripple.
So XRP is not Ripple's token. Ripple is a company. XRP is a token that sits on a decentralized permissionless ledger. We use that token in our products that we offer to our customers to facilitate cross-border payments, but it's not Ripple's token.
Okay, so whose token is it?
It sits on, as I said, it's a token that sits on a decentralized permissionless platform. Anyone can own XRP, and many people do for many different reasons.
Okay, we'll move on.
So that right there is a massive reason why Ripple won the lawsuit, because XRP wasn't created by them. And that decentralization aspect shows that, an expectation of profit based on the efforts of the company Ripple, they weren't two correlated things.
It's a decentralized protocol.
Okay, but it was issued by Ripple, no?
It was not.
Who created it?
The founders of the ledger, the creators of the ledger, created the ledger in 2011. When the ledger was created, all of the units of XRP that will ever exist were also created. Mm-hmm. Some of those founders that created XRP kept some of that XRP for themselves. And when Ripple, the company, was founded after, some of that XRP was gifted to Ripple.
All right.
So that right there is the big reason why they won the lawsuit right there. Because a lot of people thought that Ripple created XRP and then they just held it in their escrows, and then the efforts of Ripple is what made the project grow. That is not true. And so that's massive. Now, another thing to talk about too for the future of crypto that will either make or break this industry is the crypto bills that are being proposed. Because since 2022, there have been at least 50 digital asset bills reportedly introduced to Congress, aiming to govern everything from stablecoins to the jurisdiction of, altcoins and everything in between. However, at least 4 of them are seen as potentially having a major impact on the industry if passed. And the House of Republicans who drafted new legislation argued Wednesday that it was an attempt to fill gaps in the existing regulatory regime and to deter digital asset firms from leaving the U.S. for other countries with crypto-specific rules as they move over to, like Dubai and the Middle East and, closer to the BRICS nations that are forming those allies, the alliances to take down the U.S. dollar. And so the legislation would give the CFTC sweeping new powers over crypto trading, expanding jurisdiction that today focuses on futures contracts and other financial derivatives. And the House bill is the crypto industry's wish list. Senator Elizabeth Warren said in an interview, she says that I don't see how a bill like that makes it through. And on Wednesday, today, Republicans signaled a hope that Waters might help them pass a separate, more narrow crypto bill focused on regulation of stablecoins first, which are digital tokens backed by assets like the US dollar or bonds or, certain percentage of precious metals. Most of them, like Tether, for example, is backed by bonds and treasuries and all of that. So it's interesting how the whole crypto market uses Tether for liquidity to get away from the dollar and to get away from the fiat paper money system. But Tether is virtually backed by treasuries, which is debt, right? So the whole crypto market is backed by debt as well too. So if treasuries or bonds go down, well, then the crypto market's going to go down. And I've talked about that in previous videos, but here are the 4 bills that are most likely to be looked at the closest. The Financial Innovation and Technology for the 21st Century Act. This bill was introduced, July 20th, aiming to create a solid process for determining if a digital asset is a commodity or security, and would clarify the jurisdictions of regulators, because the Ripple versus SEC lawsuit didn't really do much for the rest of the industry. Yes, it gave clarity for XRP, but this rest of the industry is still in question until one of these gets passed or goes through. And the bill would give the Commodity Futures Trading Commission, which is the CFTC, power over digital commodities and clarity on the SEC's jurisdiction as well. 2, the next bill is the Responsible Financial Innovation Act, RFIA, and it also aims to give greater consumer protection by providing laws to prevent another FTX-style event from occurring. And this was proposed by, you see Senator Cynthia Lumens, if you guys remember her putting that out there and getting that proposed. Digital Asset Market Structures Bill is another one. And under this bill, before a certain crypto token is given a commodity status to be registered by the CFTC, it would have to undergo certification with the SEC to prove it's adequately decentralized. So it would have to go to the SEC gatekeeper and go through what Ripple went through, whether it's as intense and long of a lawsuit or it's quick and they settle, they make payments, or it's like library token or something like that. Well, this whole industry is going to need to go through that. So there's going to be volatility it's going to take years, guys. This is not just going to happen in the next month or two. This is going to take longer than 2 years, longer than 3 years, longer than 5 years. By 2030 is how long I'm expecting this really to take, maybe even longer than that. So XRP and Bitcoin are your safest bets in the crypto space right now. Everything else is in question. The Digital Commodity Exchange Act, on April of 2022, this was last reintroduced, establishing that stablecoin providers could register as a fixed value digital commodity operator, inclusive of recording and reporting requirements. The DCEA hands the CFTC the power to register and regulate spot exchanges, which are brought under the same rules as other commodity exchanges. And so as we see BlackRock's ETF go through over the next, 40 to 200 days, well, would that put us in line with what happened back in 2000? If we go all the way back here, if we look back at 2015 for the 205-day period where everything was still in question, the debate, about how crypto is going to be regulated went back and forth, and we didn't really see Bitcoin do anything. Went from like $500 down to $300, back up to $460, down to $360, back up to $450, down to $388, and after 205 days, broke all the way up of $790. Could we see something like that happen this entire year as the Fed just keeps raising the effective federal funds rate for Bitcoin just to bobble around? And then depending on where we're at on the Dow, we'll keep you guys updated on this market as we sit at 72 on the RSI right now. So I'm expecting the Dow to see some form of correction at some point within this range. I'm not expecting it to break out relatively soon. And also, I'm expecting Bitcoin to come back down in the short term to this 200 moving average in red and bounce off of it and just consolidate sideways as we wait for BlackRock's ETF. So right now, the most important thing for you to do is not to wait. Don't just sit there passively and wait and look at these charts and hope and pray that your holdings go up and pray that your portfolio goes up. You need to be proactive right now, because if you have to operate, and this is the best type of thinking you could possibly have, you have to operate as if this is going to take place, as if we're going to see another massive C wave down that's going to be even lower than where the Dow corrected to, that dropped at 20%. You have to operate as if we're going to see the biggest stock market crash in history, and it's going to take 16 years to get out of here. Because in my next video coming up, subscribe to the channel right now. My next video coming up that you're going to see either today or tomorrow when this gets published, I'm going to talk about the Dow to gold ratio. That's going to show you why I am not touching stocks right now at all. Okay. And I'm more bullish on precious metals. I'm more bullish on crypto than ever before. But to preserve wealth, focus on putting your foot on the gas. Don't play defense. Operate like this is happening and develop skills to pay the bills, right? Skills pay the bills, because opportunity is created during crashes. That's when more millionaires and billionaires are created than ever before. So it's all based on your perspective. I know a lot of people see this and you're like, you're spreading FUD. No, I'm not. I'm actually preparing you for what could happen, because if you're not prepared for this, and if you think the Dow is just going to break an all-time high and keep going up, that is the equivalent of what happened right here on the right-hand side of the chart back in 1968, 1969, when everyone thought that the markets were going to recover and keep going up from right there. And that was far from the truth, because it took until 1982 before anything to happen. So from roughly 1970 to 1982, that 12-year period before you had to wait if you bought the new peak for the Dow, good luck accumulating wealth, right? Good luck, let alone, right? Michael Saylor had a great interview as well too, talking about how the Dow, on average over the past 100 years. Well, if you were to have $1 million in a savings account, that the spending power of that would drastically decline at a 7% annual inflation rate based on, what the Fed has been doing through their monetary print orders. And just naturally, inflation is a thing that's going to continue over time. But if you kept $1 million in the Dow, it would be worth about $1 million 100 years later because it's offsetting inflation. So this is the Dow, or the stock market, has been preservation of value. But if you're not growing your money beyond that, you're just preserving your income right there. So the stock market is not for you to make money. It's for you to preserve your income based on inflation of what the Federal Reserve is doing to the dollar. And the dollar is going to start declining even more